Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Aditya. Clearly, if you see in terms of markets, we are trying to scale and go on to an upward journey. We're above the 18,700 mark. So a close above those levels is going to be interesting to watch out for. 100 points up move coming in terms of Bank Nifty as well. And clearly, it's the FMCG pack which is seeing some good traction in trade today. Tata Consumers, you have ITC. In fact, apart from that, from the consumption space, you have Titan as well as Asian Paints. Kotak continues the downward pressure. HCL Tech, SBI, as well as M&M, and you have Adani Enterprises, which is trading under pressure. Dairy stocks have been in focus in today's session as well. Some good traction coming in terms of those names. But let's understand, from a technical perspective, what is it that we are watching out for? Because clearly there is buying interest coming in from traders and investors, but the gains remained absolutely capped because the range has been very narrow. And the all-time highs still seem to be a distant journey from here on. Joining us on the show to discuss more is Aditya Agarwala, Head of Research and Investments at Invest for Edu. Aditya, good afternoon and welcome to the show.
Hi, good afternoon. Thanks for having the show.
Always a pleasure to have you. Aditya, my first question coming to you is clearly, we are seeing gains in today's session. However, the range has been pretty narrow. And number two, we're still some distance away from the highs that the markets have been staring at. Now, the PCR is also at a comfortable zone. The WIX is not really indicating any risk in the system as well. The underlying message everyone is talking about is positivity. What is that key hurdle that we're looking at?
So to be honest, we will eventually hit a new all-time high. It's a matter of time when we do that. But having said that, it also brings along with it the volatility that is going to be persistent in our markets. I don't see a smooth sail towards a new high, maybe a 19,000. It could be a bumpy ride. And mind you, we are looking at multiple factors. One is the inflation back home, which is cooling off. Second, the Fed's stance going ahead. Is it going to be hawkish, turn dovish, or they're going to look at pause or look at the data also coming from US? So I believe markets will be choppy and volatile. And within this choppiness, it will eventually hit a new all-time high. So that goes without saying. And at the moment, we are locked in a very narrow band, as you mentioned at the start of the show. So 18,750, about 18,800 on the upside is the immediate hurdle at the moment. And on the downside, clearly 18,500 to about 450 is where we are looking at supports on the downside. Now, if you take a look at the open interest data as well, we're seeing a shift, at least in trade today. So there could be maybe a sharp short covering rally seen in early morning trade. And on the put side, you will notice that the open interest has suddenly shot up at 18,800 to about 18,900 in between this zone. And on the call front as well, you will notice that open interest has shot up to 18,900, about 19,000. So I won't be surprised if index actually expires, which is the day after tomorrow, above 18,700 comfortably. It could be closer to about 18,800 as well.
Right, so that's with regards to where Nifty goes. Now, coming to Bank Nifty, if you see yesterday's data as well, clearly call and put both on the 44,000 level are holding a sizable open interest, right? Now, that is giving you an indication that there could be consolidation around current levels. If that is the case from today's perspective as well, a 100-point up move is what we've seen in terms of Bank Nifty. Does the bias still remain positive, number one? And do you think the dips should be used as a buying opportunity on Bank Nifty?
The picture is a little different if I take a look at the Bank Nifty chart, to be honest, because we had an outperformance from the Bank Nifty first. It was the Bank Nifty which led the rally in the Nifty and the other sectoral indices that we are witnessing now. And now I believe it's time for Bank Nifty to take a pause and maybe move sideways to about underperform, if I can say that, the benchmark index or maybe the other sectoral indices. I'm not too gung-ho on the banking stocks at current levels. In fact, if you take a look at the internals, you will notice names like SBI, Kotak Mahindra Bank, HDFC, which were the leaders, are now taking a back seat, and you will notice a kind of a profit booking in all these names, barring ICICI Bank and Axis or maybe an IndusInd. Most of the banking stocks are witnessing a consolidation or maybe a minor profit booking as well. while we see a churn from maybe a banking sector to a realty or an FMCG, which you mentioned at the start of the show.
Right. So that's with regards to where banking names are concerned. Moving on, if you see in terms of stock specific action, one counter I want to talk to you about is MRF. Hit a 1 lakh mark. I think the first Indian company to hit 1 lakh. What is the journey looking like going ahead?
So I'll tell you, it's not only MRF. In fact, it's the entire bunch of tire stocks which have done very well for themselves. In fact, MRF, because of its price, which is approximately 1 lakh, which is now at 1 lakh, you see the volumes are slightly on the lower side. Otherwise, stock would have outperformed big time before itself. I believe it has still room on the upside. This is just the start of the journey for MRF, because you look at the way the likes of Apollo Tire and the C8 and the JK Tires has performed. I believe it's a matter of time before MRF catches up and hits levels of at least 1 lakh 3,000, about 1 lakh 5,000 on the upside. 3 to 4,000 rupee up move on the upside is doable on any given day. And I won't be surprised if you see more upside in the stock. But yes, very few traders or investors would look at buying a stock, because if you buy one stock of MRF, you'll have to shell out a lakh rupees now. Vis-a-vis, if you take a look at other tire stocks, maybe people would prefer buying any other stock, which is why predominantly stock has been underperforming. But it's a matter of time before it sees a good 10 to 15% upside from these levels. I'm very gung-ho on MRF. In fact, the entire bunch of tire stocks look very attractive. To start with, C8 would be the top pick, followed by MRF.
Right. So that's with regards to where tire players are concerned. Moving on, overall, Dixon Technologies is seeing a heavy long build up in today's session. What's your view and what should the strategy be?
So Dixon has been a massive outperformer, and just this month, stock has seen 11% upside, followed by a massive move in the previous month as well. From current levels, the risk to reward is clearly not in favor of going fresh long on the stock. I would avoid, honestly, taking long positions in the stock, because clearly 4,500 is the next hurdle here. If yes, there is a correction in the stock of at least 3 to 4% or maybe 5%, then I would be interested in going long in the stock, because there clearly is a trend reversal in the stock, without a doubt. I would deny that, because the kind of volume action followed by price action is seen, it clearly indicates that there's a trend reversal in favor of the bulls. But at current levels, it is sitting at overbought levels, in fact, extreme overbought levels on shorter time frame charts. So minor profit booking from current levels cannot be ruled out. That could be an opportunity which traders should look at, latching onto the stock clearly, and then look for targets of northwards of 4,500, maybe closer to about 4,700 as well.
Right. Aditya, what about a Tata Communication as well as a Trent? Both these counters are also seeing a long build up. Good opportunity?
Oh yes, both the stocks look very attractive on the charts. In fact, to start with Tata Communication, I believe it has broken into an all-time high territory. If I'm not wrong, last time I checked, I believe these are times to go long. And if you're already long in the stock, continue to hold long positions, because I believe stock will easily see at least 15 to 20% upside. Any stock hitting a new all-time high sees at least 10%, and then it follows up with another 5 to 6% up move. So at current levels, yes, I believe if you're already long, continue holding on to long positions, build long positions. 1,500 is a very strong support here, so definitely you can look at going long. And talking of trend, in fact, this is a very interesting chart. This has been the one of those stocks which continuously outperforms, make higher highs, higher lows. If you flip to a monthly chart, time frame chart, and you plot a 20 DMA here, 20 DMA acts as a stop loss line for the stock, and it is a beautiful looking chart, because every time stock comes close to 20 DMA on correction, it witnesses a fresh buying interest and hits a new all-time high. So this is one stock which you should add in the portfolio, continue to hold, rather than looking to just trade the stock. At current levels also, I believe one can definitely look at going long, put a stop loss closer to about 1,600 and look for a target of 1,800 on the upside.
Right. Moving on, if you let's pick up a few of the other names as well, which are seeing some good traction in trade today. Z Entertainment is seeing a short build up, as well as you have a Interglobe Aviation, which is seeing a short build up in trade today. Aditya, what should the strategy be with both these names?
So we will start with Indigo first. Clearly, stock was calling for a profit booking. It's just that the news flows followed it, which is why we are witnessing a good volume-backed sell-off. But to be honest, from 1,800, stock had seen a very good up move to almost 2,500 odd levels. Sitting at overbought levels, it was due a correction. Now, this correction, I don't think it's going to halt so soon. I believe fresh shorting opportunities still persist, despite the fact stock is down today 3% already. Any pullback move here, 1 or 2% could be used as an opportunity to go fresh short in the stock. I'm looking at a downside of 2200 here, which is still a decent down move. With a stop loss at 24, 24.20, I believe one can look at going fresh short here. As far as Z is concerned, I think it could be a trap as well, going short on Z. Though I wouldn't recommend going long yet on the stock because there's a consolidation which is going on. And mind you, 165, 170 is a very strong support for the stock, and it has been testing those levels and bouncing back from those levels. Yes, if it starts to trade beyond 205, 210, then there could be a case for a short covering or maybe a long build-up here as well. But at current levels, I would clearly avoid the stock rather than going long or short. There are ample opportunities out there in the market, so why not go for that?
Right. So, I think those ample opportunities is what we need to discuss as well later. But clearly, if you see in terms of Laurus Laboratories and the Berger Paints, bullish trends seen on these counters, as well as if you see a Bajaj Finserv and a Bandhan Bank as well. If you have to look at both counters, let's pick them up one by one. What should what are the derivative data and charts indicating?
So we will first start with Berger Paints. This is one segment, and in fact, within this segment, one stock which I'm extremely bullish on has been a marked underperformer because maybe of multiple reasons. The spike in crude oil prices. Now that the crude oil prices are coming down, the chart structures also look very healthy. It's trading above all its major moving averages. So from current levels, one can still go long on the stock. Berger Paints, look for a target of at least 700 to 720. I'm referring to a more of a positional trade here. And maybe with a stop loss at 680 calls for a very good buy. It's a low-hanging fruit, to be honest. Hasn't seen that kind of an up move. Both Berger Paint, Asian Paints, I believe, are good to go. Coming to Laurus Lab, I still believe the up move will be short-lived. Though we are witnessing a good long build-up here, as you mentioned, but I still think the up move will fall short, closer to about 390, 400. I don't see a massive upside here. 400 also looks a bit stretched at current levels, because it is yet to come out of that a zone of corrective wave. So once it does that, then maybe I'll be more bullish. But yeah, you can play for a 2 to 3% or maybe at max 5% here.
Right. So that's with regards to a few of the names that we've discussed. Aditya, apart from these names, which are the other counters that come to your radar that one should be watching out for?
I would clearly stick my neck out and look at two sectors. One for sure has to be a real estate, because this is one sector which has been outperforming for past two trading sessions. And mind you, look at the chart structure. If I just move it to a monthly time frame, the Nifty Realty Index, I see a good 30% upside from current levels. And mind you, the recent correction halted at the previous peaks from which it had broken out. And if we see that kind of 30% upside in the index that I'm talking about, we'll be trading above the 2008, 2009 levels, which is a big up move we are referring to on the real estate. And look at the way all these stocks have been moving. You name it, be a Prestige Estates, be a Brigade or a DLF or a Woodridge Properties. All of them have seen a decent up move. So these names can be looked at. Maybe I would also go ahead and strongly recommend make a basket of real estate stocks, start an SIP, stay invested here for at least a year or so, and you will see a very good return from this entire pack. So real estate is definitely something which I would look at. The second sector is IT. I believe this could be the joker in the pack while we are talking about profit booking or maybe sideways consolidation in the bank Nifty or the banking stocks. I believe it's time to look at IT stocks. People are still ignoring this because of the obvious reasons. It's still witnessing volatility and profit booking, bouts of profit booking. Suddenly you see a 5 to 10% downside in some of the stocks. But I still believe those are the days when you should look at going long on the stock. And again, out here, you can start an SIP, make a basket, or there are ample opportunities in the IT names. So the start was with the mid-cap IT names. I believe it's time to look at the large-cap IT names as well, to name a few. Maybe a TCS, an Infosys, and an HCL Tech. These three definitely stand out. Within the mid-cap names, definitely your LTI, Mindtree, your LTTS, your Coforge of the worlds definitely look very strong. So IT is something I would stick my neck out and I would like to participate in the rally, despite the fact it has not shown that kind of an up move. But I believe it's due for a big up move. And you look at the NASDAQ, I would like to bring NASDAQ here. And it has made a consolidation at a bottom for sure. And now it's witnessing a decent up move. So it's going to trickle down to Indian IT names as well. And I believe it's a matter of time before you see a good up move in the IT stocks. These are low hanging fruits. Why not catch them now?
Absolutely. In fact, IT is clearly an underdog right now, as you're mentioning as well, because from April lows, the kind of up move that we've seen in terms of IT players, and the rally has been in terms of the mid cap IT names versus the large cap IT names. And as you mentioned about NASDAQ as well, it's again gone back to the August highs it hit. So there is momentum, and that's something that the Indian markets could mirror as well. Thank you, Aditya, so much for joining us on the show and
Pleasure.
sharing those views overall from an F&O and derivative perspective as well. But clearly, a close above 18,700 is an interesting one in today's session. Gains of around 0.6% coming in there. And if you see Bank Nifty as well, that has managed to end above the 44,000 mark as we speak. In terms of stock specific action, you have Tata Consumers, Titan, Asian Paints, Cipla, ITC in terms of the top gainers. Whereas on the losing end, we've already mentioned about the financials as well as few of the IT majors that have been under pressure. In terms of stock specific action, interesting names. MRF, the first company to hit the 1 lakh mark in trade today. In fact, it's ended, I think, also towards 1 lakh. Z Entertainment has recovered quite a bit from the day's lowest levels. Inox Wind Energy hit record high as the shareholders will be gaining after the merger with the parent. Indigo has denied reports of co-founders' intent to sell stake, and that's the reason why we did see some positive momentum on that one. And Devyani International also saw a sharp surge in trade. So a lot of movers and shakers in trade today, but the key headline for the day is MRF it hitting a 1 lakh mark in trade, and this is history for the Indian markets as well. That's all that we have on this edition. Thanks for watching. Lots more lined up on the other side. Please stay tuned.